Hey guys, Tim Melvin of Banking on Profits and the Community Bank Stock Investor, the monthly version of our publication. Coming to you from down here in Central Florida, where naturally I've spent most of today checking hurricane supplies, making sure there's plenty of water, gas for the generator, bourbon, wine, books, candles, food, all the fun stuff we might need if that hurricane kind of kicks back towards the onshore area. Right now, the models have it a little bit off the east coast of Florida. That'll make for a very windy, noisy night for us, but hopefully no damage. Now, of course, if that thing shifts back to the west a little bit, could get even more interesting. I was asked, why didn't you evacuate? We considered it, but here's the thing down here in Florida. They didn't call school for Monday here in Orange County until today. And by today, of course, the Turnpike 75 and 95 are just absolute parking lots. There's gas shortages, so you would leave in your car with no assurance whatsoever that you could get gas. But anyway, another story. Before we settle in for what was supposed to be a nice trip down to Sanibel for our anniversary, but instead we're going to settle in for a little hurricane experience this weekend, I wanted to come to you guys, those who have not signed up or subscribed to any of our publications yet, and I want to make you my back to school hurricane sale offer, okay? We're going to give you 1 year of the Community Bank Stock Investor for just $49. Now, that's usually $199, but I really want you guys to get involved with this. This has been a very exciting experience for me as the editor slash publisher of these publications, but it's been very profitable for readers. So I just want to kind of go through what's been going on with this newsletter and why I really want you to be involved. So I'm willing to give you the first year for just $49 so you can check it out and see for yourself exactly what I'm talking about. And, you know, in the last, or since January, let's not make it better than it really is. Since January, we've had 8 takeovers in the stocks that we've recommended in the Community Bank Stock Investor. We recommend usually 2 per month, 3 out of every 4 months. So actually 2 out of every 3 months. I'll get back to that in a minute, is why it's only 2 out of 3. I'll tell you all about that. But anyway, we have had so far 8 takeovers this year, each with a gain of more than 100% for subscribers who bought when we originally recommended the stock. That's exciting to me. It's equally exciting to me that we've been doing this about 2.5 years. We've earned about 2 times the market's rate of return on a compound average annual basis. And in the last year, the portfolio has returned about 34% for subscribers who bought all the stocks right around the price where we recommended them. That's pretty exciting, guys, especially since we've done it with a lot less risk than owning even an index fund, just about any other type of stock-based system or approach to the markets. We've got much higher returns with much lower risk, and $49 for the year. I want you to get on this. I'm going to tell you how in just a second. Now, I've told the story a lot when we first started out. Maybe I'm guilty. I haven't told it enough in the last year or two. But there's something going on in America's community bank space. It's called the Great Consolidation. And it's really been going on since the 1980s, when under President Ronald Reagan, we passed some legislation here in this country that made it possible for interstate banking. Before then, most banks could not cross state lines. If you built your bank, you had to stay within your state. They relaxed those rules. So we had about 18,000 total financial institutions at that time. That's just gone on and on and on and on. There's been some periods of acceleration following the savings and loan crisis. Banks got very, very cheap, and consolidation picked up quite a bit through the 1990s. Slowed down a little bit in the aftermath of the internet collapse and, of course, 9/11, but it's picked right back up again, especially since the credit crisis. Now, let me tell you just kind of exactly what's gone on here. Okay, you had the credit crisis. That was horrible. But a lot of banks, especially small banks, they didn't have special purpose investment vehicles. They weren't making moronic loans. So they had a tough time of it, but they survived. Post 9/11, post credit crisis in 2010, we started seeing the passing of all kinds of new banking regulations, most notably Dodd-Frank, as the federal government, as it always does, came in and passed measures that would have prevented the last crisis. Probably won't do anything for the next one. So anyway, the bankers of America went from being Some of the most popular people in town, let's face it, I mean, up until the credit crisis, if you were a small town community banker, you were making loans that help people buy homes, buy cars, put their kids through college, expand their business, invest in real estate projects. You were a pretty well liked guy. Probably part of a regular foursome at the golf club on Saturday, member of the various civic groups. It was a great job. After 2008, 2009, it really wasn't a great job anymore. You were foreclosing on people you went to high school with. You were having to deny business expansion loans. You weren't able to make those student loans. The regulators were in your office every day, and they never went away. They showed up. They stayed. They were coming at you constantly. The people that you talked into buying shares of your bank at $10, well, the stock is $6. You're not a very popular guy anymore. You're tired. You really don't like being a banker. Statistically, you're close to 65 years old. So you're really thinking about, well, maybe this is a good time. If I could get some of my money back on my stock price, maybe I should just be done with this and, go ahead and get the condo down in Florida. Hopefully not South Florida this particular weekend, but you get my point. Banking's not fun anymore, is how one banker put it to me at a convention here in Orlando earlier this year. It used to be fun. It's not fun. Bankers are tired. Now, let's look at the other. So all these guys, they're tired. They want to sell. They're looking to sell the bank. They're open to sell the bank. On top of everything else, you've got the regulators coming into the bank now. The compliance costs are soaring, so your bottom line is shrinking. You've got new technology costs, cybersecurity concerns, things you never had to worry about before. And this is just adding on to the fact that banking's not fun. Now you have all these other expenses and worries. Your bottom line is shrinking, and you're kind of thinking it's time to sell. So we've got sellers. Oh, okay, we got a lot of sellers. Going to be seller's market. Pricing will be terrible. No. You got a lot of buyers too, guys, because there's a lot of publicly traded banks in the United States. You guys, if you've ever invested, you know, what does Wall Street want to see? Growth. We're in a 2% growth economy, probably not coming out of it anytime soon. I see no reason, no demand that's going to make the economy any better than it is right now. I don't think we'll go backwards. Don't think we're going to take any great leaps forward either. What does that mean? Rates are not going a lot higher anytime soon, so you're not going to get an increased net interest rate margin that would make it easier for the smaller banks to make money. So smaller banks, let's call them those with $1 billion or less in assets, every one of them's thinking, I've either got to grow or I got to sell. But you've got a whole bunch of bigger banks between $1 and $10 billion. They got to grow. They can't expand. There's a bank branch next to McDonald's on every street corner in the United States, it seems like. So there's not really organic growth possibilities that are going to satisfy Wall Street. So how do you grow? You buy a smaller bank. So here's what we've got. We've got a pool of people they're tired. They want to sell. We've got a pool of people that want to buy. So this is the great consolidation trade. Started in the 1980s. We had about 18,000 financial institutions. We've got about 6,000 depository institutions right now. Some people think it's going down to 1,000. I think the number is probably closer to 2,000. But that means the banking industry is going to decrease in the number of banks by about 2/3 over the next 2 decades. Going to be an enormous amount of money made for people that buy the banks that are for sale. They're sold at a premium to the banks that are growing, and you get kind of a double compounding effect as you buy the little bank cheap. You get bought by the medium-sized bank that gets bought by the bigger bank. We saw it play out in the 90s. We're going to see it play. We're seeing it play out right now with 8 takeovers in our focus stock portfolio so far this year. Now, coming into 2017 with Donald Trump taking the presidency, some of the sellers said, wait a minute, this could get good. Okay, we're going to see a pro-business president. We're going to see some growth that'll knock interest rates up. He's going to push back regulations. We're going to see tax reform. Our bottom line could go up by 30-40% when all this is done. And everybody was excited, and they took a step back. Transactions slowed a little bit. We all know what's happened. That has not happened. Mr. Trump, love him or hate him, very contentious relationship with Congress, having a tough time getting much of anything done on regulatory reform, tax reform. And it doesn't really seem to matter. If you don't get those two done, you're not going to get this type of economic growth that's really going to raise net interest margins for the banks back up to the levels seen before 2007. not going to happen. And of course, you got to hold a lot more regulatory capital as a bank today to satisfy the regulators in a post-crisis world. So now the bankers are going, okay, it really didn't get any better. It's still not fun. It's not all that profitable. My stock price is going nowhere. What am I going to do? I'm going to sell my bank. So we're starting to see activity accelerate. In August alone, we had 3 takeovers in the portfolio. So that's pretty exciting. So $49, you go to marketfi.com, you search Tim Melvin, it'll come up as Banking on Profit monthly newsletter. You click on that, you enter Bankers49 as the coupon code. You get 1 year of the Community Bank Stock Investor for $49. Guys, you can't go out and have dinner by yourself with a nice bottle of wine for less than $49. Okay, so this is costing you one dinner, and it's a strategy and approach to the markets that could pay for hundreds of dinners and college educations and new cars and retirement and all kinds of things over the rest of your investing life. $49 for a year, because I want you guys involved. Here's what you'll get. Every month you get the edition. There's extensive commentary by me. I've been investing in the small bank space for about 25 years, been investing in the markets as a value investor for, oh wow, over 30 now. I don't know how that happened. I guess that's where all the hair went. But anyway, I've got the experience. I've been really active in the space. We've made a lot of money in the space, both for myself and for outside investors over the years. So you get my commentary. We also 2 out of 3 months, we're going to track all of the institutional buying. We're going to track what all the activists are doing. We're going to track what the insiders are doing. And I'm sorry, this is actually every month you get all this fun stuff. And then every 3rd month, we do a 13F report where we report on everything all the activists and bank stock specialists are doing as far as what they're buying. And, you can look at it, you can break it out regionally, by state, by market cap, however you want to do that. But you can find some valuable ideas amongst that research. Now, 2 out of every 3 months, we're going to give you a couple of focus stock picks. Sometimes it's more. I think 1 month we did like 10 focus picks because they were all in Florida. And back in December of 2015, we decided that you needed to own every bank in Florida. And of course, that just worked out unbelievably well, as Florida is always the first to boom, first to bust. We're booming very nicely with no sign of a bust involved. And more importantly, every bank in the country that's looking to expand wants to expand into Florida because we've got one of the better economies. And most of the year, with the notable exception of this weekend, one of the better weather situations. That's probably not going to be true here Sunday and Monday, but we'll deal with that. Now, that comes out monthly. Every week you get my reading list, and that's just a little list of articles, blog posts, whatever I've run across during the week that I think is interesting. It could be about the banking industry, the economy. A lot of it's going to be about the real estate industry, both residential and commercial, because that is the collateral that ties back to most of what the banks are doing. Any trouble that's going to show up in the banking industry will show up in the real estate industry first. Right now, we don't see anybody doing anything terribly stupid in either sector, so we're kind of pretty comfortable with where we are. So you get that. Like I said, 2 out of every 3 months. We'll give you 2 or more focus bank picks. Those are the stocks that are up 34% over the last year, beating the market by better than a 2-to-1 margin since we started doing this. You'll get that. Now then, that 3rd month, we're going to follow all of the activists, the bank stock specialists, the value investors that are actively involved in community banks, and we'll break that out and report on those for you. So you get that every month. Now, the biggest complaint with my approach to the markets is that it's boring. And I'm going to tell you, it is. We buy stuff and we hold it for a few years because it's either going to get taken over, or they're going to grow to the point where they have a multiple that we think is just too high. Both of those, by the way, wins for us as value investors in the community bank space. So yeah, it's boring, but as Charlie Munger said, buying right and sitting tight is really the secret to making money in the market. It's not trading back and forth and chasing patterns all over the screen, and over trading and chasing hot stocks and doing all the things that individual investors have done since the dawn of time to damage their personal returns and underperform the index. We buy right. We have very stringent criteria as far as the risk levels, the condition of the loan portfolio, the price that we're willing to pay for these banks, and we've got a few other criteria, and it's an incredibly successful formula. So successful, in fact, that out of 37 stock picks focused stock picks since we started doing this a little over 2.5 years ago with the monthly publication. We have one stock that's not up. One stock that's not up. And as I said, we've beat the market by a 2-to-1 margin over that period of time. And it's really started to accelerate over the last 12 months with a gain of over 34%. So it's boring. But then again, is it? August was pretty damned exciting. We had 3 takeovers, and we're cashing in tickets for stocks that we had gained over 100% with over a relatively short period of our investing lifetime. We're not glued to the screen. As a community bank stock investor, you buy right, you sit tight, you're out doing stuff with your family, you're building your career, you're reading books, you're expanding your mind, you're watching a lot of baseball, you're enjoying life, and your portfolio is growing in value because you bought strong, solid community banks at fantastic prices with all the ingredients in place that have led to success in the past. And it cost you $49 to get this education, this guidance, the stock picks, and all you need to know as a successful investor. If you take advantage of this offer right now, today, and it's not right now, today, I'm going to keep this offer open through the end of September, so you got some time to think about it. But seriously, $49, you spent 3 times that the last time you went out to dinner. Going to a baseball game with 2 kids, I'm going to say 4 times that, at least. So this is not a huge expense. I want you involved. I want you to try it. I think you'll understand why, for individual investors, community bank stocks are the single best place to put your investment dollars. So anyway, this is my blatant sales pitch. I haven't done an out-and-out aggressive, go get them, gotta buy this in a long time, but I think we should do that right now. And I think that you should go to marketfi.com, search under Tim Melvin. I'm going to put a link in the description to this video, so you can just go there and click on that. But if for some reason that doesn't work, just search my name on marketfi.com, Banking on Profits Monthly, click on that, it comes up. When you go to checkout, use the coupon code BANKS49. You'll get the first year of Community Bank Stock Investor, we used to call it the Banking on Profits Monthly, for just $49. Higher returns, lower risks, buying right, sitting tight in the community bank space. It's worked extremely well for me over the years. It will work well for you, and all you're putting at risk to learn how to do this is $49. So come on, guys, sign up. Let's move on. I will be back with a video for everybody next week after the hurricane has gone. So enjoy your weekend. Mine's going to be interesting.